We've got Mark Konyn, who is CCAM CEO. He joins us now on the show from Hong Kong. Mark, to begin with, US Senate leaders have failed to reach an agreement so far, and there's just hours to go before the deadline. The fiscal clock is ticking fast. Do you think President Obama will be able to strike a deal?
Well, there's hope still that the 11th hour deal is still possible, although we haven't seen any evidence yet that the two sides can come to an overall agreement and, get it through both the Senate and the House, which is pretty difficult given the makeup of both chambers. The reality is that we'll probably see some sort of compromise, and if not, there's still a 2-week period through which the leadership can try and engineer some sort of compromise.
Now, ratings agencies have threatened that the U.S. Will be downgraded if they fail to find a solution to the crisis. Many believe Washington may agree on a temporary deal and continue to work on a solution next year. Do you think there's a case for a downgrade in such a scenario, and what would that really mean in terms of an overall impact?
Well, this shadow of a downgrade has been facing the US for quite some time, since really the onset of the global financial crisis. And we remember that rating agencies came under a lot of criticism through that period. We don't see that as an immediate threat to the overall financial system because, of course, that the US dollar is still very much a reserve currency.
Now, Mark, in the event that the US fails to reach a deal before we enter the new year, what's the sort of impact that it will have on the US economy and also on global equity markets?
Well, the worst case is quite bad. We're looking at something like 4 percentage points lost of GDP, and certain sectors within the economy will fare worse, particularly the defence sector, which will really bear the brunt of some of these cuts. What we've seen really with these Bush-era tax concessions, they were really a form of stimulus that helped the economy through that very difficult period following the global financial crisis. And any adjustment now really could disrupt the pattern and the path of recovery as the economy looks forward into 2013. So there is quite a lot of concern around that. However, it's not so much a cliff at the outset, and there's probably a 2-week period where it's a gradual slope before some of these changes, these cuts, these tax cuts, and the tax hikes and the effect of the spending cuts starts to take effect.
As we move into 2013, what are the big challenges for global markets, Mark?
Well, once we get beyond the immediate concern over the US budget discussions, investors are still going to be very much focused on whether or not the global economy can stage some sort of recovery and continue to improve. There are still concerns, of course, in the Eurozone over the debt crisis there and the strength of the banking system and its ability to bear the brunt of some of those issues, and the shape of the recovery in the US. In emerging markets, of course, we've had this very severe cyclical downturn that there are signs now that we're starting to emerge from that period.